If you rent in retirement, there is real money with your name on it sitting in a state office right now, and almost nobody is going to mail you a reminder that it's there. If you rent, or your parent rents, or you're 5 years out from making that move yourself, this one is for you. Here's the part that should make you sit up. One retired school teacher who rented the same apartment for 11 years left more than $10,000 on the table across those 11 years. Year after year after year. Because she believed a program with the word homeowner practically stamped on the name couldn't possibly be meant for her. Same building, same rent, same fixed income as the woman 2 doors down who was quietly collecting that money. The only difference was one piece of information nobody ever handed her. And I'm going to hand it to you right now. Because the same quiet mistake she made is being made this very minute by hundreds of thousands of older renters across this country who have no idea they're making it. This video is for educational purposes only and is not tax or financial advice. Talk to a qualified professional before making any decision about your specific situation. My name is Eric, and this is Retirement Plan with Eric. Every week on this channel, I break down the tax rules, the retirement traps, and the strategies that nobody else is bothering to explain in plain English. If that's what you came here for, hit the subscribe button right now and turn on notifications, because the next video could be the one that puts thousands of dollars back in your pocket. Now here's exactly what's coming. I'm going to walk you through the 3 states that pay senior renters the most, including the one that genuinely surprised me. The income lines that decide whether you qualify, the exact forms and the deadline you cannot afford to miss, and a 5-minute self-check you can run tonight, even if your own state isn't on my list. Stay with me, because if you've ever watched one of these and thought, that's nice for them but not for me, this is the part where that changes. Let me set the table first. And if you saw the last episode, you'll remember this. There's a wall between renters and homeowners when it comes to tax relief, and that wall is mostly made of bad assumptions. When you own a house, the property tax bill shows up with your name on it, so when relief exists, you go looking for it. When you rent, you never see that bill. Your landlord pays the property taxes and folds them quietly into your rent, so the cost is invisible to you, which means the relief feels like it can't possibly be yours. But here's the thing the states actually understand, even when renters don't. You're paying those property taxes. You pay them every month inside your rent check. And more than a dozen states run something to give a chunk of that money back to older renters specifically. Remember Eleanor from last week, the one in New Jersey? She walked through the Anchor program, where a renter 65 or older with income under $150,000 collects $700 a year just for renting and filing a short application. $700 for a renter. That's not an accident or a loophole. That's the state deliberately handing money back to people who rent. Now let me show you what this looks like with real people in real states, because the rule on paper and the rule in your kitchen are 2 very different things. Scenario 1. Margaret, 71, a retired public school teacher in the Lehigh Valley of Pennsylvania. She rents a 2-bedroom and lives on a modest pension plus Social Security, with a household income right around $26,000. For 11 straight years, Margaret looked at Pennsylvania's property tax rent rebate program, saw the words property tax, and decided it wasn't for her because she didn't own property. Here's what she missed. That program pays renters. Pennsylvania pays a standard rebate of up to $1,000 to eligible older adults whose household income is $48,110 or less, and you qualify at 65 and older, or as a widow or widower 50 and older, or with a disability at 18 and older. At her income level, Margaret was leaving close to the full $1,000 rebate behind every single year. Money she could have claimed by filing one application. And over those 11 years, that's more than $10,000 walked past. On a fixed income where $10,000 is a year of groceries and the gas bill combined. And the deadline this year is December 31st, 2026. Which means if you're a Pennsylvania renter watching this, there's still time to file. Listen carefully, because this is the sentence that costs people money. The word property in that program's name has talked more renters out of free money than any other word in the entire tax code. Scenario 2. A husband and wife in suburban Boston, both 68. He's a retired union electrician. She kept the books for a small contractor. They rent because they sold their house years ago and never wanted another roof to worry about. They'd heard of the Massachusetts Senior Circuit Breaker tax credit, but the name did exactly what Pennsylvania's name did to Margaret. Circuit breaker sounds like something in your basement, and the whole thing reads homeowner only, so they never claimed it. Here's where it gets critical. For tax year 2025, that credit pays a maximum of $2,820, and it pays renters. You have to be 65 or older by year end. Your total income has to come in under $75,000 single, $94,000 as head of household, or $112,000 married filing jointly. And here's the renter trigger almost nobody understands. 25% of your annual Massachusetts rent has to exceed 10% of your total Massachusetts income. Run that math on a typical retired couple paying real Boston area rent, and they sail right past that line. Which means that couple was eligible for up to $2,820 a year and claimed exactly zero. You claim it on Schedule CB, filed with your Massachusetts return. Scenario 3. And this is the one that surprised even me. A widow in the Twin Cities suburbs, 73, who spent her career as a retired hospital administrator. Minnesota. When I think about where Americans retire, Minnesota is just about the last state that comes to mind. And that's exactly why this one matters. Minnesota quietly runs a renter's credit that pays a maximum of about $2,720, with a household income limit around $77,570. That puts Minnesota right up in the same tier as Massachusetts, both paying renters more than $2,700 a year, while Pennsylvania anchors the bottom of our three at $1,000. Now here's the part that changes everything, and it's why I'm telling you to pay attention, even if you filed before. Minnesota changed how you get it. Starting with tax year 2024, a new form called Schedule M1RENT replaced the old form M1PR for renters. That means renters now claim the credit right on the state income tax return, instead of filing a separate property tax refund form. Stay with me, because this next part is the part most people miss. When a rule changes like that, the people most likely to lose out are the ones who think they already know the drill. Our widow filed the way she always had, looking for the old separate form, and a credit worth more than $2,700 nearly slipped right past her. If you're still with me, the next 90 seconds are the most important 90 seconds in this video, because this is where most people stop paying attention and start losing money. Here's the trap, and it's a cruel one. Every single one of these programs is means tested. Pennsylvania has its income line, Massachusetts has its income line, Minnesota has its income line, and so does New Jersey's Anchor, and so do federal programs like HUD's Section 202 Supportive Housing for the Elderly, which serves people 62 and older earning less than 50% of the area median income. Now picture a generous retiree, a retired letter carrier in suburban Cleveland, 70, who's been quietly saving and decides to do something wonderful. Her daughter is buying a first home and struggling with the down payment, so she writes her a check for $40,000. Beautiful, loving, exactly what a good parent wants to do. But watch what happens. Pulling $40,000 out of a retirement account in 1 year can spike her income for that year clean over the eligibility line for the very rebate she'd otherwise collect. And depending on the program and how the gift is funded, she can knock herself out of the help she qualified for. Same person, same heart, same daughter. Do the gift after she's claimed her benefits for the year and times the withdrawal carefully, and it costs her nothing in lost rebates. Do it without thinking, and she can hand back thousands in benefits she'll never see. The rule is simple. Claim the programs first. Do the big, generous personal moves second. The order is the whole game. Here is your action checklist for this week. 1. If you rent and you're 65 or older, go to your own state's revenue or treasury website and search your state's name plus the words Renter Property Tax Credit, and read the Renter tab, not just the Homeowner tab, because on most state sites, the renter benefit is hiding behind a separate tab, exactly the way New Jersey's Anchor Renter benefit does. 2. If you're in Pennsylvania, file the property tax rent rebate application before December 31, 2026, and ask your landlord for a rent certificate so you can prove the rent you paid. 3. If you're in Massachusetts, pull Schedule CB and run the renter test, 25% of your annual rent against 10% of your income. And if it clears, claim up to $2,820 on your state return. 4. If you're in Minnesota, get your certificate of rent paid from your landlord, which they owe you by January 31st, and claim the credit on the new Schedule M1RENT, not the old M1PR. 5. Before you make any large gift or any big withdrawal from a retirement account, check whether that move pushes your income over your state's rebate line, and if it does, claim your rebate first and make the gift second. 6. Whatever state you're in, recognize that these programs make you reapply every single year, so build it into your routine the same week every year, because qualifying once does not qualify you forever. Let me run the numbers from the top one more time so you feel the weight of it. Massachusetts, up to $2,820 a year for a renter. Minnesota, up to roughly $2,720 a year for a renter. Pennsylvania, up to $1,000 a year for a renter. Our school teacher Margaret, leaving her share on the table year after year simply because a program with the word property in the title convinced her it wasn't hers to claim. That's not an aggressive reading of some obscure rule. These are real programs run by Pennsylvania's Department of Revenue, Massachusetts's Department of Revenue, and Minnesota's Department of Revenue, written into law and sitting in plain sight the entire time, waiting for renters to walk through a door they assumed was locked. Before you go, I put together one thing that makes all of this dead simple. It's a one-page 50-state renter rebate cheat sheet, and it lists every state's program name, the agency that runs it, the income limit, and the deadline, all on a single page you can print and keep on the refrigerator. It's completely free. There's nothing to buy. Just go to the link in the description and it's yours. And it'll tell you in about 30 seconds whether your state has money waiting for you. This is Eric, and this has been Retirement Plan with Eric. If this video helped you, hit the like button right now. It takes 1 second, it costs you nothing, and it tells the algorithm to push this video out to more retirees who need to hear it. If you're not subscribed yet, hit subscribe and turn on the notification bell so you don't miss the next one. If you know somebody who rents in retirement and assumes none of this applies to them because they don't own a home, send them this video today. It might be the most useful 5 minutes you give them all year. Next week, what your mortgage does the day a parent moves into assisted living, because most adult children find out too late. If you have a parent in their 70s or older with a house still on a mortgage, do not miss it. And tell me in the comments, do you rent in retirement? And did your state make this list? Yes or no? I read every single comment, and the most common questions become future videos. I will see you in the next.